All right, so we're going to go ahead and get started. Again, anyone who joins new, feel free to add any questions here, and I'll start to answer them as we go. And and we're going to do this webinar a little bit differently today because there tends to be a lot more information in these kind of webinars. I'm actually going to share my screen, and I am going to actually write some notes in a document as well. So actually, if maybe Camilla or someone else, can you just confirm that you can actually see my shared screen? There should be a document that says Q4 weekly webinar series, sea freight disruptions, and China power crisis. I'm just going to go ahead and get started. If someone could just comment below to confirm that you can actually see the shared screen, that would be super helpful. Oh, and by the way, I'll be typing out some more on these notes as well. So if you actually want a copy of these notes afterwards, just comment notes below. Let me see. So just comment notes below, and we'll have Camilla send it to you. All right. Okay. All right. So we're going to go over two major topics today: sea freight disruptions, particularly to the US, but affecting the EU as well, and the China power crisis. So both major issues that a lot of you have heard about and probably wondering about what the impacts on are, especially Q4, this very critical period. Now, again, I'm going to focus on these topics, but if you have any comments, you have any questions on other topics, ideally related to Q4 logistics, feel free to comment below and I'll make sure to answer them. All right, so let's start with sea freight disruption. So one thing is that I actually made a quick video about this on YouTube quite a while back because this was an issue quite a while ago. So if you want just a lot more context, a lot more information on what's happening, make sure to go to this link. And again, if you want these notes, just comment notes below and we'll have Camilla send it to you. And I have some background here, but let me actually just type out some of the context. All right, so what is actually happening? All right, so what led to this, right? So the thing is, it's kind of COVID. I mean, everything is kind of related to COVID, but not exactly directly related. It's because here's the thing. Let me actually pull up this chart that I have the link right here, actually. So this is actually a very nice chart that I use often that shows global sea freight container index prices. Now, you'll actually see here, let me see, when did COVID start actually? COVID started back too long ago. COVID started back in early 2019. This is the average price index for sea freight around the world for a 40-foot container. Now, as you see, even back in later 2019, sea freight prices actually weren't that bad. I mean, this is actually considered relatively normal here. They're a little bit higher than usual, but you can see that these price increases, I mean, this is obviously the huge price increases. The price increases didn't actually happen directly after COVID. The sea freight price increases actually kind of happened later in the year, actually in early 2020. Now, and obviously they spiked up, way up, and there's this little dip here recently. Now this dip is not necessarily good, all right? So we'll talk about why. Again, the link to this is here and it's always updating. So what happened was that, well, okay, so after COVID, let's say kind of started recovering, because obviously we're still facing COVID right now. But after COVID kind of started recovering, e-commerce and demand for products went way up in the US and EU, which meant much more demand for products from China. And then at the same time, China recovered way faster and production started going into overdrive to meet the demand. Now, this point, by the way, is also related to this second topic. So we'll talk about that a little bit later. So then what happened was that tons of containers going via sea freight to the US, EU, but not enough goods coming back. I mean, the reality is that, and I'm sure if a lot of you were in e-commerce at the time, there was obviously a lot of concerns when COVID first started. Okay, is e-commerce going to die? Is there going to be, is dropshipping going to die? And obviously that did not happen. As a matter of fact, it actually, e-commerce went way up, whether it's Shopify stores or Amazon or things like that, or just general retail sales. A lot of people were starting to just buy a lot of goods when they were at home. But the problem is that demand went way up within the US and the EU. However, they didn't really, stuff is just made in China, right? So there was increasing e-commerce demand in China as well. However, there was not really much demand for US goods going into China. So what this happened is it caused a huge trade imbalance. And containers were going into the US and literally just getting left there. So I won't go into too many details here because I have a lot of information in this YouTube video. So again, make sure that you actually do check that out. But basically, containers were going into the US, going into the ports of LA, Long Beach, and there was so much movement in the container container movement at the time that port workers literally did not have time to actually put empty containers back on the boat, and boats were actually going back completely empty. Maybe not completely empty, but definitely not with the empty containers that they were supposed to, and definitely not with full containers because there was very little demand for freight going backwards. And actually, there's some data on this as well to kind of show you there. I think there is some. Yeah, so for example, like even now, right? Even now, if we look at a route, let's just say, okay, Shanghai to Rotterdam, all right? Shanghai to Rotterdam, it's like $14,000, all right? Rotterdam back to Shanghai, $1,500. So this has been the case for the last year or so. China to the EU, China to the US is incredibly expensive, but going back, it is still pretty normal and a lot cheaper, obviously. And this is mostly because of the container shortage and also because of just the mismatch in demand. And very interesting tidbit is that most containers, actually, I think the majority of containers are actually produced in China, and they were actually facing, some production issues as well because they couldn't expand their capacity, and they didn't want to expand the capacity. Container demand is usually pretty steady, and because of that, they weren't making more containers, so literally caused a shortage of empty containers, which drove up the price a lot, and also especially with increasing demand. Now, this has really not improved at all. And then the other thing actually that is actually happening, let's talk about the US right now. More recently, there are increasing backlogs in the ports, causing massive delays, right? So this was causing delays. The backlogs at the ports were causing massive delays as well. And why is that? I mean, it's Q4, right? I mean, the thing is, like, physical retailers and also any brands that fulfill using US fulfillment, they need stock in the US. I mean, literally, right? And they depend on sea freight. Because it's the only cost-effective way to ship a lot of products. Even at these prices, it's still the most cost-effective way to actually ship a lot of these products. And because of that, there are massive delays at the ports as people are trying to get into, trying to get their products to support holiday sales. All right, so basically this is what's happening. That's the context of causing all this. So again, not exactly related to COVID. However, it is caused by the outcomes of it. All right, now, so what are the impacts right now? All right, so let's talk about a baseline. So previously, fastest ship from Shenzhen to LA took 13 days or so. All right, that's actually not bad, right? Plus some time for processing, etc. Right? Now this is the fastest ship. All right, this is not with COVID happening, right? Now that's really not that bad at all. It took 2 weeks, right? Which actually meant that, and I know this from my own experience as well, because every single year, if you guys know about my brand Cody as well, we actually use sea freight to ship our goods into the US for Q4. Every normal years can ship out from Shenzhen by mid-November, even sometimes a bit later, and still make it in time to US for Christmas shipping cutoffs. Right now, so this is actually not bad, right? However, this year, delays have caused it so that, okay, you know what? Now it is the end of October, so that it is already too late to be confident to ship out in time to arrive in the US for Xmas fulfillment. End of October. All right, so we work with a lot of sea freight providers. We work a lot of freight forwarders, and they are basically telling us that if your goods are not on a boat, like literally right now, actually it's literally today, because this fast boat from Shenzhen leaves every Wednesday, and today is Wednesday the 27th. So if you're not on that boat, most likely you're at a huge risk, and probably a huge likelihood that your products are not going to make it in time going on sea in order to get to your fulfillment center in time to ship by Christmas. Now, because usually when you're talking about US fulfillment, you're usually talking about like a Christmas cutoff, depending on what service you use, maybe December 15th to December 18th or so, right? Now, obviously, if you use like 2-day, like priority and things like that, then you have a little bit more time. However, that gets incredibly expensive depending on what products that you are actually selling. But just generally speaking, like if you are depending on sea freight, you should not expect that you should be confident that things are going to be arriving on time for Xmas, for Christmas fulfillment for the US. And it's actually a little bit worse for the EU as well, because EU tends to take a little bit longer by sea, at least. Now, so what this means though is lots of consumer fear that that products will be out of stock for Christmas gifts. Actually, let me just like quickly just randomly search some articles. So let me see, sea freight. I'm gonna search for sea freight Christmas, and let me see what it shows you. Okay, so shipping crisis is getting worse. Here's what it means for Christmas. How the crisis in container shipping could affect Christmas. Shipping delays means Santa might be late. So, I mean, these are very big news media outlets. Is Christmas canceled? So there's obviously a lot of consumer fear, and honestly, probably rightfully so. Actually, especially toys, actually, because I'm in the toy industry, and toys are really, toy companies are really worrying right now, because toys are relatively low margin, they're relatively light, perfect for sea freight. But if you can't use sea freight in time and all these delays, then it actually means that a lot of these toys might not even be shipped cost effectively or on time. They're not going to be on shelves, which, these are probably one of the most important things for Christmas as well. And then, yeah, so So now, one thing that I will say is that unfortunately, some of the plans to address this by Biden are are probably not going to work. All right, so his biggest plan is 24/7 port operations. All right. Now the problem with 24/7 port operations is, first of all, but Port of Long Beach has already been operating 24/7 for a month or so. All right, and nothing is really changing, but backlog still continues, because the thing is, like, the backlog just increases. There's just more goods coming in. Like the backlog just gets longer and longer, and this is really not helping. And they have been already operating essentially 24/7 for a month, but that is not, it's not really helping out yet. And the other thing is that downstream in the supply chain can't actually support 24/7. So for example, truck, rail shortages to get to where it needs past the port. There's simply a shortage of truck drivers, of trucks, of rail capacity, because, I mean, don't forget, if you're using US fulfillment, like, you're not fulfilling from the port, right? You're fulfilling from somewhere else. So this is a problem. And one other problem is that many fulfillment centers are not ready to receive 24/7. So you have this issue where truck drivers, they don't want to pick up goods that are expected to arrive in a fulfillment center, let's say Sunday at midnight, because they're not actually open, they're not actually receiving. So this is something that I don't really think it is going to be as effective as people might think. Now, I'm sure this will help lower the burden a little bit, but this will certainly not address the issue. All right, so now what this means for you, assuming you can fulfill from China. So first of all, okay, actually, first of all, don't depend on sea freight for Q4 starting now, which is end of October, for Xmas delivery. I mean, just don't do it. All right. You face the risk of having a lot of inventory tied up, the cost of sea freight, and still not going to make it on time. All right. So the good news, though, is doesn't really affect air freight, direct China fulfillment, with a caveat, though, except maybe higher cost increases because of additional demand. Now, here's the thing, right? Just logically speaking, if sea freight is not working for most companies, they are going to try to use air freight. They're going to try to use direct China fulfillment. So obviously that could actually cause a increased pressure in the cost of air freight and also direct China fulfillment as well. So just keep that in mind. However, the consumer fear means that Xmas shopping season is longer than usual. Media is already talking about buying now before. So typically speaking, the biggest holiday peak really starts around Black Friday and Cyber Monday, which is coming up at the end of November. This is when a lot of people are shopping deals. This is when a lot of people actually start their Christmas shopping traditionally. Now, what we're seeing here is media saying is start buying stuff now, start shopping pre-Black Friday deals. And actually some retailers are actually already planning for pre-Black Friday deals so that they get ahead of the curve and make sure that they buy products before they run out of stock, which means holiday peak should start earlier. All right. So good for anyone who can actually sell them. Now, obviously, if you already have US inventory and you can take advantage of this, and that's great for you, you plan ahead. Although it's not a planning issue, I don't think anyone could have planned this big of a disturbance. But if you can actually sell it, but if you are using, for example, direct from China fulfillment, then that actually does mean that we will be able to we already see some increased peaks in our client sales already. That is a little bit earlier than usual, actually. And I expect that it's going to continue to grow as well, a little bit earlier than usual, again, before Black Friday even starts. So that means a longer sales season. And then also, China fulfilled brands can sell far later than local fulfilled if they are out of stock, right? I mean, this is pretty obvious, right? If in the worst case scenario, and a lot of people think the reasonable scenario is that a lot of locally fulfilled retailers, a lot of physical stores are going to run out of stock of a lot of products, but China fulfilled brands are they can ship as late as early December, or let's say early mid-December from China, depending on shipping line. All right, so this is where if you are shipping from China, you actually have a pretty big advantage here, right? And this is also why we do want to worry about this higher cost increases. I think that shipping price increases will be a little bit higher than usual. This year, they always increase during Q4. However, it becomes a very different equation if you literally are the only one that actually has stock and local competitors do not actually have stock, right? So generally speaking, I think that this is a generally net positive situation if you are drop shipping or fulfilling directly from China. Or, I think that if you really focus right now on local fulfillment and you're worried about your container delays, you worry about just running out of stock, you should also consider probably, just consider using China fulfillment, even if you are locally fulfilled right now, if you're concerned about stock. All right. Now, actually, I am actually just going to not talk too much about it here because we actually do have a YouTube video a little bit more on these delays and the impacts and how you should prepare. So make sure to we have YouTube video and on this comment Q4 freight below, delays below for link. All right, so if you want us to make sure to send you a link when it's ready, just comment Q4 freight delays below in the comments and I'll make sure to send you the link. All right, so also make sure you plan your supply in China accordingly. All right. Look, all this does not matter if your supply chain is not well planned out, because all this really only works if you are planning your sales schedule, planning your inventory, planning your factory management, using the right shipping lines as well. All right. So this is really, really important. So make sure to check out the modules in our free course, comment course. All right, so we do have some modules on Q4 planning on this. So definitely, if you have not received it already, just comment course below, and it's going to, and Camilla is going to send that link to you. What's up with this formatting? That's weird. Okay, there we go. All right, so yeah, so Timothy has a question. The problem for a general store in particular, it's kind of difficult to know exactly how many quantities to put in the stores and the retails as well as online selling. Yeah, so look, I think that one of the downsides with general stores is that it does make inventory planning a lot more difficult. And honestly, there is not a perfect solution to that. Now, depending on what your sales distribution is in your general store, I mean, because you could have one of those general stores where really, a handful of products are really just taking off, and everything else is just gravy, right? So what a lot of our clients do in situations like this, or in situations like Chinese New Year's as well, they actually just really kind of cut out where markets sold out the low selling SKUs, or just say that there's going to be delays on them, and just really focus on pre-stocking the main SKUs that are actually selling. But the thing is, if you're selling a lot of different products and they're all doing well, the thing is, like, this is kind of where you start facing the pain of traditional retail, right? I mean, in a traditional retailer, you got to stock for everything, and you have to take some risk in that. So Tiffany, unfortunately, we obviously don't know your exact situation, but I mean, if you want to talk to us about it, feel free to reach out to Camilla, and we kind of see if something we can help with your situation. All right, so that's it for the sea freight disruptions. And again, for people who have just joined recently, I will be sharing these notes as well. Or for people who are watching this webinar later, we will be sharing these notes as well. So make sure you comment notes in the comment below so you can get this document. All right, so now let's move on into the China power crisis. I linked an article here just for context. Let me pull that over. I won't go to this whole article actually, but just you go ahead and read a BBC article on this topic. And of course, you can just probably search for China power crisis. There's gonna be a lot of them. All right, so I'm gonna first talk about a little bit more context. All right, so for a while now, I don't remember the exact number of years now, but China wanted to, or actually China made it a goal to be more green, which is good, by the way, which is good, right? Biggest thing is it made it a target to reduce stop coal production and coal energy generation. All right. Now, the idea, though, all right, was that it would be replaced by other forms of energy. All right. But the thing is, the problem, and this is actually where it's related to this point right here. China, after COVID, it recovered faster than anyone really expected, probably even China expected. And the e-commerce boom, the retail boom, the demand for products within the US and the EU, they started going into way overdrive, and production started going to way overdrive to meet that demand. And it's continuing to happen. Is way more production industrial activity than expected post-COVID. These take a ton of energy, all right, a lot of energy, producing raw materials, producing like steel, producing plastics, and just factories. Like they take a ton of energy, which made it so that energy projections were just way off. All right. So obviously, this meant increase in demand. All right. Now, here's the other problem that I think that is not talked about quite as often, is that also energy prices in China are strictly controlled by the government. Technically, usually a good thing, right? I mean, you don't want your energy prices in any kind of country to just like to spike up and down all the time. But the problem is, supply has flattened, decreased. in terms of coal. All right. So coal has actually it's just really just decreased. So China has not been producing much coal at all. They're trying to wean off coal energy, but the issue with this is that coal power plants are literally losing money by operating because energy prices are held stable. All right. Literally, like coal power plants are literally just burning cash. I mean, just burn, well, they probably wish you could just burn cash and create energy, but you don't really do that. But they're just losing money, and which means supply of energy has actually decreased as well. All right. Now, what does this actually mean? Oh, so supply decrease in terms of coal, which means higher coal prices. This is demand. All right. Oh, and then actually one other thing is that much of China is heated by coal in the winter, and winter is here and will only get colder. All right. So this is something also is going to cause strain on the entire situation as well, because heating usage is going to go up, which also means that demand for coal is also going to go up as well. Now, so classic supply and demand, right? Usually when demand goes up, supply goes down, prices should go up. But when prices can't go up, something is going to give. Probably not demand. All right. Okay. So now what are the impacts? All right. So starting actually, it was actually starting before October. I mean, there were some instances even starting earlier. Many industrial production regions have limited energy usage. All right. So look, because prices couldn't go up, demand goes up, supply that can't meet it, there's literally nothing you can do except like the entire power grid just going out and collapsing, right? Now, what the Chinese government has decided to do is to just tell certain provinces to actually limit energy usage. Now, this is something that honestly happens quite often in China, where the Chinese government, they just say, okay, like you guys need to follow this mandate, and the provinces just figure it out. All right. So what happened is that the targeted factories, raw materials, producers, industrial centers, because they take the most energy. All right. So because they use the most energy, it was decided to be a relatively efficient way to help to meet these limited targets of energy uses, as opposed to all of China just losing power, right? So what happened? Some factories could only work, let's just say 2 days a week, example, right? Some factories could only work during night times, which is kind of ridiculous, right? I mean, it's usually factories don't really work during the night times or open during night times if they actually have to. And then some factories couldn't work at all. All right, so now this is now the actual impacts, right? Slower production for some products, higher raw materials prices, which drives up the cost of production and therefore COGS as well. All right. Now, these two are the most direct issues from here. Obviously, slower production is from the fact that some factories can only work limited times per week. Higher raw material prices. This is actually caused by the fact that actually raw materials factories and plants, they actually tend to be the most, these factories tend to be the most energy consuming versus productivity. All right. So what I mean by this, it's not a perfect measurement, but basically the government also considered how productive are these factories or businesses that are actually getting these power shortages, and they basically decided that, hey, some of these raw materials production, especially hard hitter stuff like concrete and steel, but also like stuff like plastics and fabrics as well, they tend to be considered relatively low margin, relatively low productivity as well, right? So this is actually tend to be a bigger issue than actually assembly lines, because technically speaking, assembly lines, they use actually less energy per productive unit or per dollar margin, I suppose. But still, this actually impacts overall COGS as well. All right. Now, I will just say that there was a huge scare that by now the whole supply chain would collapse. I know a lot of folks were concerned about it. A lot of folks were concerned about huge production delays going into Christmas. All right. Now, one positive thing, all right, and this is also related to this sea freight issue, kind of positive. Factories have seen much lower demand recently compared to usual Q4, because a lot of freight orders were getting canceled or not getting placed due to freight issues. All right. So, look, one thing about the supply chain is that everything tends to be interrelated. And this is why it's hard to really think about things in a single way without considering the rest of the chain, right? Because of the fact that there were sea freight delays, and actually, let me actually go back to this chart, right? Because of these delays, because right now it's already starting to be too late to actually ship in time for Christmas, this dip right here in the price, technically it is kind of a good thing with price, but this actually means that demand has been going down, because after this, like, it's not going to be in time for Christmas anymore. So I do actually expect this pricing trend to continue to go down, maybe significantly so, right? But this doesn't necessarily mean it's good news, because as it goes down, it just means that you can't get it for Christmas anyways, and you might as well just wait for Q4. You might as well just wait for Q1. And kind of a similar thing that's happening with factory production as well in regards to this power crisis. There actually is lower demand for factory production from the usual sources that usually get really, really busy finalizing production for getting onto a freight container maybe in the next couple of weeks, right? So this actually eases demand. And by the way, the reason why you don't see as many articles on this, because this is something that we've actually been we at EcommOps have been very, very diligent about speaking to all of our client factories, because obviously this is a very big deal for us. And the reason why I didn't really announce kind of this earlier is because actually all of our factories have been telling us, yeah, like, it really sucks to have to work only a couple of days a week, but the demand is actually lower. So actually there have been some delays, and I'm sure that if you're a client, I'd say maybe 10, 20% of your products, we have already told you that there are delays due to this. But trust me, it could have been a lot worse if there was also the usual Q4 demand going outbound on sea freight. All right. And then also, I mean, this is something where where I would say, well, it's kind of positive, I guess, factories have started to figure it out, updated their work processes, working overtime, overnight, power generators, etc. All right, this is where, hey, one thing that I do know about just China and the Chinese working culture is that people tend to be able to figure it out. Companies tend to try to figure out how to make it work. So they've really updated their processes, that they're really working overtime, overnight, power generators, these are all things that they have already been doing already. And I think that, this actually is really help to smoothen production as well. All right. So I think that, look, I think that there is still a risk, right? The risk still remains. Again, heating is run mostly by coal. Coal shortage might get worse. Chinese government is unpredictable, to say the least. So it's hard to exactly say what is going to actually happen. But yeah, so, and look, we'll keep you updated, all right? We'll keep you updated. So make sure that you continue to join these webinars, make sure you continue to follow our group as well, all right? Now, I think that one general piece of good news is that, China fulfillment itself shouldn't be at a high risk of impact, all right? This is actually because fulfillment logistics is very low energy intensive compared to other industrial factories. All right. Well, without going into too many details, fulfillment, for example, you don't really need much energy. You need lights. I guess you don't really need that many lights anyways, right? Like you need lights, you need stuff like maybe conveyor belts, you need stuff like computers, but all that stuff actually obviously can be totally run on actually let's just say fulfillment can totally be run on generators if need be. And we at EcommOps, and also I bet a lot of other suppliers have already considered the backup plan for this. So this is the generally good news. And then the other thing is that they are usually based in areas they are usually not based in traditional factory areas. Energy limits tend to be placed by sector or neighborhood. All right. So normally speaking, fulfillment centers from China are typically located not in factory areas. Usually you want to be closer to the city. It's better for labor and things like that. Though obviously that there are going to be some fulfillment centers that are going to be based in traditional factory areas as well. And actually, a quick note. Actually, Express has their own. How do you say it? Actually, it would be called like has their own. I don't know, business park. I think yeah. We'll just call it business park. Unexpress has their actually their own like big business park, big area. It's kind of like a sector within itself, and has its own power as well. So hopefully something like Unexpress at that scale is not going to be as affected as well. All right, so that's the generally good news for this. All right, so what does this mean for you? All right, so I would say right now, don't worry too much. It's way better than we expected in the worst case. All right, look, I'm not saying this is good news. All right, obviously this is all bad news, but I think that in the last couple of years, whether it is in e-commerce or any kind of business or just life in general, I think that we've gone through a lot of very bad situations already. And the silver lining in this, I guess, it's still better than the worst case that we expected that it could actually happen. Now, however, even more important to plan ahead for Q4, right? Because the thing is, like, still risk it could get worse, and you want to get ahead of the curve in planning with your factories, so they prioritize you if there are production issues. All right. So I keep talking about how it's so important to plan for Q4 sales, even before Q4 happened, actually. But it's even more important now. The higher risk there is in any kind of business, any kind of situation, the more that you should plan for it early. Now, I know that for some of you guys, maybe you're more used to just traditional drop shipping, not holding stock. Now is the time that you got to stop thinking about it, right? Plan for stock if you want to scale this Q4. Look, it's very possible this all rolls over. You know, it's all possible that nothing really happens and you get all the benefits of all this stuff, right? If you have benefits of all of the silver lining of all this stuff, right? But the thing is, like, if you're running a business, right? A big factor you got to consider in running any kind of business, especially as you're scaling up, growing, you got to consider the risk. All right. Risk is a huge factor that I don't think that, you know, a lot of especially newer econ folks, they really consider. You have to consider the risk and keep that in your decision making. As again, as risk goes up, you have to plan earlier. You have to potentially put down more money in order to plan for that risk. You got to plan for inventory. You got to, you know, pay up front and things like that. Or you might decide, hey, okay, you know, I don't want to take that risk. I don't want to plan for inventory. And then maybe you do actually decide that you're not going to have a big Q4. And if something happens with your production, you run out of stock, then you decide that you're just not going to sell anymore. I mean, obviously that is an appropriate decision as well, right? But I want you to be aware that this is a decision that you have to consider and that you have to take, all right? And then again, so check out our module on advanced Q4 supply chain planning in our free course. All right, so yeah, you know, it's just we actually do have a lot of materials in terms of how you should think about advanced Q4 supply chain planning. We do have a free course, just comment below, and it's totally free, by the way. And the only reason why I keep talking about it is because, like, there's so much information there that I keep repeating over and over again that just help me out as well. Just get the free course and just look over it, and happy obviously to engage in any questions as well. All right, cool. Yeah, so this is pretty much all I've prepared for. Again, I can share these notes with you guys, but just comment notes below, and we'll make sure for Camilla to send it over to you. All right, so let me see. I just want to check if there's any questions that anyone had on these topics, or again, any kind of other things that you want me to discuss in preparation for Q4 logistics in general. We have maybe 7 minutes left. Let me read some comments. Timothy, thank you for the kind words. Daniel, thank you for the kind words. I think there's a one second. I'm trying to figure out how to read all these comments. There was sorry guys, there was a comment from Kelly. I don't think much. Okay, so all right, so Timothy, Randy, do you think Unit Express is the best? in terms of using air instead of sea freight? So kind of depends on the situation. Now, directly from China, I think that overall UniExpress is going to be the best. It has the most coverage, it has the most reliable services. However, there are other options that I think are similar, starting to be similar, depending on the situation. So 4PX these days are quite good, and they tend to have a little bit more flexibility in some of the things they can send. They can send some of the more sensitive items, they can send a little bit more oversized items as well. UBI is also quite decent as well, especially to Australia and New Zealand. I say stick with those three though, if you're thinking about China fulfillment. But if you're asking for just one general option, definitely UniExpress. If your products are pretty standard, UniExpress has definitely the best balance of coverage across the countries, consistency and speed, and also just general consistency, especially as we go into Q4. And by the way, all of these services, UniExpress, 4PX, they actually have different levels. There's service levels, there's regular lines, ordinary lines, there's express lines as well. This is something that, I'll talk about this in a future webinar, by the way. As we start hitting the last days of shipping before Christmas, you really want to consider, okay, do you want to upgrade your shipping lines? Because the normal or economy options in these lines, even though usually they're quite good, they start to really struggle as we go into Q4. So for example, for something like the UniExpress Express service, the last day to ship out in time for Christmas for the US, for example, normally it might be like December 12th. I mean, there was a year before COVID, we had the last batch December 12th, and 98% arrived in time for Christmas Eve in the US. And that's crazy because out of that 2% that didn't make it, a lot of it was actually just address errors or just random issues as well. This year, I would expect it's probably going to be more like December 8th or so. But we'll keep you updated. But as a comparison, the US regular line on UniExpress, right now we're probably looking at like something like 7 to like 13 or 14 days or so. However, as we go into the last month of Christmas shipping, we expect that's going to get a little bit slower, like maybe like 8 to like, I don't know, 15 or 16, 17 days or so. So this is where we start to suggest that even if you're using the regular line or the economy line, closer to Christmas, do you want to consider upgrading your line so you can extend your sales period for as long as possible? All right, yes, DHL. So Timothy, you mentioned usually use DHL. Yes, DHL is crazy expensive. I mean, it's the thing about DHL is it's not really made for consumer goods. I mean, that's really the reason why. All right. Cool. All right. Yeah. So I'll continue to open it up. Any other questions? Or if not, I can just wrap it up. And oh yeah. So as a reminder, if you want these notes, make sure to comment notes in the comments to get this doc. And I will be running this every single week. All right. So every single week on Wednesday. Okay. So let me just type this out actually. Nice. Wednesday, 11 a.m. US Eastern time through Q4 for regular. All right. So yeah. Every week, I'm gonna just run this webinar. I'm going to discuss different topics as well. I'm going to, again, usually open it up for Q&A as well. So feel free to bring your questions in. And let me see, what next week will be early November. So I think probably the most important topic that I'll be thinking about next week is actually how do you start preparing your supply chain for actually scaling up into Black Friday. So even though it's not Black Friday yet, now, next week, early November, that is when your sales are going to start to scale, and you should scale, by the way. Oh, by the way, those of you guys who might have experience with Black Friday, like do not just plan for a spike on Black Friday. That's really not a good idea, even from the marketing side as well, because the thing about the marketing side is that you want to get more confidence in your you want to have more confidence in your marketing stats, your marketing ROAS. You want to have more confidence in some inventory projections as well. Whereas if you're just like, if you're not scaling up in November and you just hope for a huge Black Friday, like you're just running blind. You have no idea how to plan. You have no idea how hard to push your ads. You have no idea how much inventory that you should actually plan for. And that's a recipe for a bad time. So starting now is when you should start thinking about scaling your ads, scaling for Q4, preparing for that, and also preparing your supply chain as well. So that is probably the topic that I will talk about next week. I'll update everyone in the group here. And actually, even for those who are joining later, anyone else who is who wants notes, comment below. And if you have any if you have a wish list for topics that we want to discuss through this Q4, feel free to comment below, and I'll make sure to prepare to discuss it over the next couple of weeks. All right, well, thank you, everyone. This is Dayu from EcommOps. Hope you guys found this useful, and we'll see you next week. Thank you.